Hello, everyone, and welcome back to the Velocity channel. And today I have something special for you. I'm going to show you how you don't need to be afraid of payday loans anymore, especially when you're going to be using those payday loans for your personal development, or even if you're going to be using them for real estate investing, or even to purchase some sort of expense or investment that will upgrade not only your bank account, but your idea of how cash flow works. All right. What we want you to do is be masters of cash flow management. So we want to illustrate how you no longer need to be afraid of payday loans, because there was a comment that they were absolutely afraid, absolutely scared. They were into fear, and it was just very sad. Matter of fact, I was taking a moment and I was just like, I can't believe that this system has duped people into believing that it's okay to be afraid of money, especially when it's not yours. You know what you need to be? Is you need to start getting used to being an opium addict. Let me say that again. You need to start being used to being an opium addict. And I'm going to explain what I mean. OPM, other people's money. Okay, that includes the payday place. So what we want you to do right here is just examine this right here. I have nothing up my sleeves. I'm wearing a short sleeve. Okay, nothing up my sleeves. I'm wearing short sleeves. Um, and this is not a magic trick. This is math. You understand? So look at what this scenario brings to us. Okay, we see that the principal remaining is $230,500, right? The years to pay off, we already know, but they know about velocity banking. The tool does velocity banking for them. They're going to pay off the house in 9.3 years. Okay. Now, my question is, what if they did not have this system? Would it be a wise investment for them to get a payday loan, get a title loan? And I'm going to leave you to answer that, right? Because you're going to see the numbers. And then use that money, which is not theirs, right, to purchase a system that will increase their way of living, right? So they got all these expenses everywhere. They got loans everywhere. They can't pay the bills, right? They don't have this system. Would it be wise to get a payday loan and have the system tell them how to pay that off, pay their mortgage off, pay their, let's see what they got. They got the Visa loan for 2,000, right? They got the auto loan for 25,000. They got the first mortgage for 200,000 and the HELOCs 3,500. We know the HELOC, shout out to HELOCs, right? Shout out to First-Lien HELOCs. All right. So anyway, we have the monthly income 5,000, monthly expenses $4,036.67, and they're doing all right with the average discretionary of $963.33. Now, remember, they don't have it. They don't have this system, so they don't know. These jokers, they're living paycheck to paycheck because they don't have the system, right? But would it be a wise idea for them to use opium? Okay, OPM, other people's money, right? Which includes payday loans, which includes title loans with those expensive interest rates. You know, we are always attack interest rates, don't we? Watch this. Okay, let's see. Let's see if it would be a wise idea or not. Okay, and this is what we bring people to. We'll just add the new account. It's a loan. Okay, manually add the loan. The name of the account is it's the uh-oh loan, okay? The lender is called Whoops. There it is, incorporated. You know, they're talking about the money that's coming in. Start balance, 5,000, right? Let's give them a rate of 50%. And guess what? 6 months to pay it off. 6 months remaining term. I know this is ridiculous, but I'm getting ridiculous for a reason. All right. Payment amount. Let's just say it is 900. Can we do that? 900. Because we got crazy interest, don't we? All right. We're gonna go ahead. That's a recast. Okay. So no, not 900. What about 1,000? There we go. Just do 1,000. Let me do this. 990. There we go. And I'm just going to go back to 980. All right, let's go 970. Okay, so because we don't want to always, you know what I mean, pay above and beyond. We don't want to pay above and beyond. We want to get paid above and beyond. Believe that. So here we go. On the 21st is the payment date, statement date the 12th. The payment date is the 21st, 50% rate, remaining term 6 months. Listen, I've had loans at 109% annual percentage rate. Okay. $5,000 starting balance. Would it be wise for them to get a tool that they need to mine the gold in their own bank account to make sure that they cash flow, because they don't know whether they cash flow or not? Okay. They're living paycheck to paycheck. They're worried that they won't be able to pay off their house, right? Okay. So watch this. $960, that's the payment amount. We're going to go next. The original balance, 5,000. Original term, 6 months. Where we're going to pay it from? Let's say you don't have a Visa. You don't have the HELOC. Let's say you just have the checking. All right. Let's go ahead and put 456, 4556, 7 in there. All right. And then we're just going to save it. Is it going to end up in the red? Let's see. Was this a wise investment or not? How far off are they going to be on paying off all of their loans, including the mortgage? How far off are they going to be? The system is calculating that right now. Watch this. Okay. You say, what? What? Did the system take it, CJ? Did the system take it? They're still at 9.5 years. I do believe it was 9.3 before, wasn't it? But now they're the potential, $168,695. Okay. Let's go through it. Let's go through it. Let's go through the action plan. The action plan is what they're going to do each and every month, right? So they're still going to get paid, right? 1,300. Got to go pay that first mortgage, about $1,200, all right? The account, we're going to go ahead and switch from the savings to the account, $3,058.92, $3,058.92, okay? Okay, then we go down here. We got the HELOC. Remember, we have the HELOC as well. We're going to switch out from the checking to the savings. We're going to put in $804.87. Then from the savings to the account, it's $903.47. Do you see how it's keeping track of it? It's keeping track of it. Okay. February, March, April, to pay it all off in 9.5 years. All of it. Now, what do I mean by all of it? Well, let's look at the accounts that they got to pay off. I'm talking about to pay off the auto loan, the the Visa, the mortgage, and the HELOC. I'm talking about paying off over $235,000. That's what I'm talking about. So would it be wise for them to get a loan, to get a product that's going to make sure that they cash flow? What are they cash flowing? Now, they're not going to be cash flowing the 900, remember? They're going to be cash flowing the $716.45, which before they had no idea that they had that much cash flow, right? Like a lot of you, right? But you don't have to stay there. Now, look, folks, don't be convinced by the story. Be convinced by the math. You just saw it. There was nothing up my sleeve. You saw me put in the interest rate, 50% for 6 months. That's crazy. 50% for a year is crazy. But you can still pay it off. You understand? 9.5 years. The mortgage is gone. The auto loan's gone. The visa's gone. Huh? Big shout out to Patrick. He's doing it up, man. Big shout out to Sharon, to Robert. It makes me sad a little, you know, because you look back at when you were 18, you look back when you were 20, when you look back when you were 22, and man, if you had had a tool that could help you like this, my goodness, Would you be the next Jeff Bezos? Would you be the next Elon Musk? And that's why we're buying America back, one family, one business at a time. So, folks, listen, get convinced by the numbers. Please rewind if you need some more. If you need some help, don't hesitate. We got the Calendly link. Just let us know. All right. God bless. You guys have a great one.